Hello and welcome to this particular session, and I believe we are all well. And today I just want to share some nuggets in terms of trading gold. I know a majority of us, a lot of traders are really passionate about trading gold. And the reason why people love gold basically is because of its personality, right? So I personally trade gold. That's the only asset that I trade. If there is no setup, therefore there is no trading for me, right? But it is very easy for you to get a gold setup. This is what basically I'm going to share here today. So the first thing we are going to look at is understand gold's personality, right? So it is important for you as a trader, if you aspire to trade gold, if you're trading gold, the first thing that you need to do is understand gold's personality. That is non-negotiable, right? That is non-negotiable. So what is some of the gold's personality? Number one, you need to understand that gold is highly volatile. That is, it moves fast and sometimes it creates large wicks in the markets. So also number two, you need to understand that gold is news sensitive, all right? It is news sensitive. And therefore you want to look at the USD news, like the interest rates, the inflation, and also the geopolitical tensions, because it tends to react into geopolitical tensions as well. Then you need to understand that gold is liquidity driven, right? So it runs stops very aggressively, right? It runs stops very aggressively. So what you need to understand is that you need to treat gold like a high performance sport car, powerful but unforgiving without control, right? So if you trade it without control, it is very ruthless, very ruthless, very unforgiving, right? So number two thing, after now you're able to understand gold's personality, then understand the best session to trade gold. Okay, so understand the best session to trade gold. And by the way, for this particular video, what I'm doing here, the nuggets that I'm sharing here is how you can be able to scalp and also day trade gold. All right, so I don't swing trade, I scalp all day trade. Right, so for scalping or day trading, timing really matters more than indicators. And I can say that the best sessions to trade gold is during the London Open, the New York Open, and the London and New York overlap, right? Those are the very best time to trade gold. During the London Open, we are looking at some clean expansions, all right? During the New York Open, that's where we anticipate the strongest moves. During the overlap between London and New York, that's where we have highest probability trades. Okay, so what you need to do with gold is to avoid low liquidity sessions like the Asian range, unless you're trading range scalps intentionally. All right, so not unless you're scalping now the range or the Asian range. Okay, number three thing that you need to understand is that gold is high probability market structure framework. All right, so it respects higher chances or high probabilities that it respects the market structure framework. So you need to keep it simple and repeatable. All right, when you're analyzing, you need to keep it simple and repeatable. So for me, how I do it, I go to the higher time frame, the daily, I mean the monthly, the weekly, and the daily to get the trend or the buyers, right? Then I draw my level in H4, right? So in H4, that's why I mark my key levels. That is the order blocks, the ones that I trade. Or maybe probably sometimes I do a bit of the breaker blocks. Okay, so then I use H1 for intraday structure. All right, I use H1 for intraday structure, and I go to M15 or M5 for entries. Okay, so I'll first of all look at M15 or the 15 minutes time frame, whereby I'll try to refine the levels from the 4 hour, right? So, and if those levels are quite big in the 15 minutes time frame, therefore I'll go to the 5 minutes time frame to refine that particular level. Because how I want to look at it is that any trade I take for gold, the maximum risk I can do is 50 pips, right? Sometimes I know it might be very there might be a lot of volatility in the market, and the pip value for gold is very tight. So sometimes during those conditions I can extend even to 70 or 8 pips stop loss. But one thing I do, or one thing I make sure, is that the trades I'm going to take, it is able to deliver a risk to reward ratio of 1:2. So if I'm risking 50 pips as my stop loss, therefore the trade or the setup should be able to give me at least 100 pips. Okay, and that's not just multiplying the risk by 2 or by 3. It's basically looking at the market structure. You see how far can the trade be able to stretch. Okay, so then after that, I always, now after I do that analysis, my focus now shift into maybe the higher highs and the lower lows, because that's where the liquidity is, right? And then I look at the break of structure, the BOS. And then now the next thing I want to see is an impulsive move, all right? I want to see impulsive moves or retracements, okay? Or retracements. And these retracements should be coming to the levels that I'm looking at, especially the order block levels, all right? Because I trade the order blocks, okay? So that's how I want to look at it, okay? That's how I want to look at it. Maybe probably I can share my chart here so that even as I discuss this, we are able to see practically, all right? We are able to see practically, okay? So number 4 thing that is very eminent, or that is very important, that you need to consider when trading gold, is that you really want to understand what actually moves gold. Okay, so what actually moves gold? What are the catalysts for gold? Okay, and number 1, of course, you're talking about high impact events. USD news, like the CPI, NFP, FOMC, right? Those are very important. Core PCE price index. Those are very key news that drive gold. Also, you want to look at the treasury yields, all right? You want to look at the treasury yields, because how the treasury yields are doing or how they are performing definitely will give some cues in terms of what we should be anticipating, all right? What we should be anticipating, maybe probably gold to do. Okay, so and that one, I basically give you the assignment to go and research and see, are they positively correlated or are they negatively? Are the treasury yields positively correlated by gold with gold, or are they negatively correlated? All right, so that is an assignment that I'll give you to find out. Okay, so the other thing is the risk sentiments, like war, inflation fears. This kind of information definitely tends to affect the prices of gold. Okay, so even in instances whereby maybe probably we know that maybe probably the FOMC or the Fed is going to cut the rates, gold starts reacting to those sentiments, because those are risk sentiments. It starts reacting to those even way before the cut happens. All right, so here the rule of thumb, basically what you can look at is that you want to look at the forex factory calendar, right? You want to look at the forex factory calendar, this one here. So if the red folder USD news is coming, right? So the best thing to do is either wait for the news to come and you trade after the news, or in case you are going to take the trades before the news, therefore you need to minimize your risk. All right, you need to minimize your risk, or you trade small sizes. Okay, that is very important. Okay, so but the best way I would advocate is to wait for the news to come out, so that now you can trade guided by the data, because the data definitely like you have seen, it really affects the prices of gold. Okay, so number 5, scalping strategy that works for gold, and this one I'm going to share basically on what I trade. I use the ICT combined with some smart money concept, and I always look at some liquidity levels, or liquidity based. I could say it's liquidity based because I'll give you a sample, maybe probably of a sell setup, and then maybe you can you can go and look at a sample for a buy setup, because the key thing here is not basically to spoon feed you, but basically to give you some cues in terms of you go and research and practice more, because practice is what makes perfect. Okay, let me show you. Where is it? Where is it? Where is it? Huh. Let me look at it. So this is how I hunt for myself. So I'll look at this kind of a scenario. The price taking out these highs, right? So takes out these highs. Remember, there is a lot of key highs here because we have the high of the days here, right? So all these highs, the price comes and takes this liquidity, okay? So after the price takes liquidity for the previous highs, then what I want to see is some rejection or displacement, okay? And you can see here we have that displacement, okay? We have the displacement here. So after this displacement or rejection, then I want to look at the structure as well. So because you can say from this particular point, let me show you. So from this particular point, what the price was doing is that it was creating higher highs and higher lows. Okay, it was creating higher highs and higher lows. So it was very uptrend, right? So if that is the structure, then what can we say that where can we say that we have a BOS, or maybe probably a change of character at this particular point? Okay, so even if you're not certain about that, therefore these two can confirm what I'm talking about. So we have that, right? So and this setup is basically when now the market is reversing, right? So where we have a change of character. So then I want to see my entry should be at the pullback after the price create a change of character, or after the price maybe creates a BOS. I'm going to show you an example of a BOS. What I want to do is now look at a sell opportunity, right? I want to look at a selling opportunity. So I want to see the price retrace towards my level, and my level here is this bearish order block. This is the bearish order block, right? This is the bearish, the bearish order block here. So I want to see the price retrace to my order block, and then from that point I can be able to take my sell from this particular level, right? I can be able to take my sell from this particular level. You will realize that the price will still come back again to some points here, right? So that is the first entry. So now that we have confirmed reversal, all right, so the next trade maybe that I'll show you for a sell is when now we have a BOS. Okay, so at this particular point we have a BOS. You can see the bodies of the candlesticks closed below this particular level. If not certain, also you can look at this particular point. We see the bodies of the candlestick closing below that point, so we have a BOS. So again, so I want to see the price push down, create a BOS. Now this is now the continuation of a trend. The price create a BOS, and then once it creates a BOS, I want to come and mark my order block, right? So that is my order block, and I want to see the price come back to this particular order block. All right, so we see the price coming back to that order block, and that's where we get another entry. Okay, that's where we get another entry. So this is a very nice selling opportunity. You have your stop loss there. Okay, you have your stop loss there, and then now maybe probably you can target the price to come all the way to these liquidity zones, because this is where it created the BOS, right? Therefore our target should be the price sweeping out those liquidities, and as you can see, the price did exactly that. They came all the way and they grabbed those liquidities. Okay, so it's that simple. And the other thing that I would say, even apart from the structure itself, or yeah, even apart from the structure itself, you realize that it will be good, will always higher chances respect these kind of levels that you're talking about. Okay, because look at this scenario. So the price came and swept. Let me give you a buy example here. So the price came and swept these sell side liquidities, that is the liquidities of this previous day, and then we see the price pushing up. So at some point here, this is on 18th Tuesday. Let me go to the 15 minutes time frame. This is the 15 minutes time frame, right? This is the 15 minutes time frame. Yes. So we see the price do that, and then now after that, what we are seeing here is a change of character. Remember, we're in a downtrend, so here we have a change of character. So meaning that the price has shifted now from sells, and now we are looking at buying opportunities. Okay, so the price continues like that, creating those higher highs and higher lows. You can see that, and at this point also it creates another BOS. Here it creates another BOS. Okay, so and after creating that BOS, what it does is that the price retraces, right? It retraces at this particular point. So even apart from that, we also see that the previous days, the where the price had opened from, it also took out those liquidities. So the reason why looking at this particular level is a very key point of interest here, all right, for buying, but the price did not come to that particular point. So but as the price continues to push higher following the structure, remember we are looking at the structure. Let me draw this so that you can be able to understand, because I tell you, the moment you understand this, then your trading game shifts, right? So your trading game shifts, right? Because gold is very simple. It's a very simple asset to trade. So you can see higher highs. So these are very nice trend. So at this particular point now, all right, at this particular level here, so we want to mark our order block, and this is our order block, right? That is our order block. Okay, so and with that order block, the reason I'm marking that is because you always prefer the candle that has a visible body, okay, when marking the order blocks. I have a video about order blocks. You can just go scroll through the channels. You'll be able to see that under the forex trading strategies playlist. You'll be able to see that. So the price comes nicely to the OB, and here we take a setup, right? And our setup will be like this. Let's see whether this is going to deliver maybe probably a risk to reward ratio of 1:2. So stop loss below the zone, and target the liquidities here where the price was coming from, and you can see it delivers a risk to reward ratio of 1:2.3. Okay, so that is a scenario of a buying a buy setup. Okay, that's a scenario of a buy setup, right? So what I want you to do is basically to back test, right? Remember, I've said what we are looking at, all the things that you need to look at for this strategy to work out. There are those who trade the fair value gaps, no problem. You can refine them using the fair value gaps. I personally don't use the fair value gaps, right? I personally don't use the fair value gaps. So what we want to see, another example, the last one probably, we want to see the price come and sweep the liquidities, right? So this is where the price opened at, right? So it comes and sweeps these liquidities there, right? Because these are major liquidity, almost where the price opened at. Okay, and then now after that we want to see the price pull back, right? So we want to see the price pull back. Okay, so that is a rejection. After taking out the liquidities, we want to see the rejection, and this rejection now, once we see this happen, the sweep of liquidity is here, which you can also call the BOS. So that's where now we want to, once the BOS happens, that's where you want to come and mark your order block, right? And this will be our order block. Okay, that one there, and you can see the price comes to this particular zone, and it activates our sell setup. All right, our target is now these liquidities here. All right, these liquidities here that the price has created, so that will be our target. All right, then now you can draw. We can comfortably now check whether that is going to deliver risk to reward ratio of 1:2. So if yes, therefore it means this is a tradable, it's a setup that you can be able to trade. And as you can see, it delivers a risk to reward ratio of 1:4, right? A risk to reward ratio of 1:4. right? So that is very important. It is very important for you to be able to understand how how to trade this particular method. It is very easy. It's not complicated. Only that we try to complicate things. So look at all those things. And also, above all, make sure that you don't take a setup that doesn't give you a risk to reward ratio of 1:3, right? Of 1:2, at least 1:2. Okay. About the stop loss, you can refine your own. Maybe probably you can do like here the peak value of gold was very tight, right? So you can do your own, you can come up with your own, as long as it's something sustainable, something that can be able to yield results, right? As long as something that can be able to yield results, so you can always come up with your own. Okay, so what are the risk management? Because we said gold is very volatile, so you want to have risk management, and this is where most of the traders fail when trading gold, because you'll see a trader has deposited $20 and they want to trade gold. Remember the rule of thumb in the financial markets, you're saying that don't risk more than 2% of your capital in every trade that you're going to take, right? And if you're going to take multiple trades at once, so make sure that the 2% is distributed equally, right? So, but when it comes to gold, you need to understand that gold punishes bad risk habits, right? It really punishes ruthlessly. Um, it punishes bad risk management, and it does that ruthlessly, right? Because it's very easy to blow an account when trading gold. Okay, so the reason why I say that if you have less than $300 in your account, don't even attempt to trade gold, because you can even not be able to risk less than 300. You cannot even be able to risk 2%, because you find that the risk value for gold maybe probably 50 pips. It does not equate even to that 2%. It's more than 2% when you have less than 300. So the best amount, maybe probably I would say, if you have like $500 and above, that is very suitable now in terms of trading gold, and you can be able to manage that capital very well. So the golden rules that I'm going to give you here, this is what really works for me, and I believe it can also work for you. So you need to risk maybe from 0.25% to 1% per trade. Okay, why not 2%? 2%, let's leave that for currencies, because we know currencies are not as volatile as gold. Okay, so when trading gold, the farthest you can extend is 2% of your account. So between 0.25% to 1% per trade is very, very okay. So then you can have maybe probably a max of, can say 1 to 3 trades per session. But for me, how I look at it, I only do 2 to 4 setups per week, right? 2 to 4 setups per week. So I can do 2 consecutive wins and my weekly target is met, right? And my weekly target is met, because again, I don't want to give myself of ambitious goals that are going to make me sweat, goals that are going to make me feel like it's like more of an hassle to attain those goals. I want something simpler, something that I can be able to attain. Okay, so also you can come up with that. And see, that's a rule. You don't have to take mine. You can come up with your own rule, as long as it's manageable, as long as it's doable. All right. And then the other mistake guys use is mental stop loss. So when trading gold, I would really advocate so much for a hard stop loss. Make sure you have your stop loss in place. All right, make sure that you have your stop loss in place. Don't trade without a stop loss, or don't trade with a mental stop loss, because things can happen very quickly, and you find maybe probably the markets are reacting very aggressively. All right, markets are reacting very aggressively. So this is also another potential. I just saw it where the market is at the moment, at that particular point. And then we have this order block, right? So we have the displacement here. So then we see the price after taking out the liquidities here. Then we see a retracement to the order block, and therefore this is a trade that I'm anticipating at least to give a risk to reward ratio of 1:2, right? This is a potential sell, right? This is a potential sell, and the price to come to these liquidities here, that's a risk to reward ratio of 1:5. All right, 1:3.5. Okay, so the golden rules we have said, don't risk more than 1%. So have maybe 0.25 to 1%. Number two, the other thing that is very important is to trade, to the number of trades that you're going to take per session. So maybe you can say you want to do like one trade per session, but it should not exceed three. Don't exceed 3 trades per session, because what you'll be doing is over trading. All right, when we say 1 to 3, is that maybe probably you might be looking at 2 trades to hit your target. So you have the first trade maybe as a loss, then you need the second trade and the third trade. Or maybe you have the first trade as a win, the second trade goes for a loss, then maybe probably you need a third trade for you to be able to achieve your daily target. So make sure you use hard stop losses. Don't trade without a stop loss. And the other thing is to avoid revenge trading. Okay, so you need to be at a point whereby you have to accept the outcome. So if a trade goes into a loss, accept those outcomes, that the trade went into a loss, right? And don't revenge trade. Instead, be calm. Try to analyze first of all and understand why you lost in that trade, and then now start preparing for the next trade. Don't attach yourself to outcomes. Okay, don't attach yourself to outcomes. Right. So the other thing is consistency. All right, so you need to understand that once you follow all these golden rules, right, consistency is very, very key. Consistency. And consistency, it is not catching every move. Consistency is whereby you are taking a plus setup, you are repeating these positive trading behaviors oftenly, and that's what really creates consistency. Right, that's what creates consistency. Okay, so let me show you this. I think I was not sharing my screen. Let me share my screen. This is what I was saying. It's a potential opportunity here. Right, we see this, the price taking out the liquidities, and then we see here the price creating BOS, taking out the liquidities, and then we see the price retracing. So let's see whether that's will be a potential trading opportunity. If also you look at this particular point as well, this is a potential level to look at some buying, selling opportunities as well. So if this doesn't hold, then we might see the price maybe probably sell at this particular point. So that's how you basically hunt for your opportunities in the markets. Okay, so the other thing that I'll mention is some common mistakes that traders make, and the first mistake is over leveraging. Of course, when you're trading gold, like I said, gold punishes, and very ruthlessly, those people violate the risk parameters. All right, so the other one is trading every spike. Remember, not every spike is tradable. You really want to make sure before you take a trade, you have an hedge. All right, the strategy, everything is confirmed in your checklist. All right, then the other thing traders do is they ignore news, and that's where they make a lot of bad choices. Because again, if you ignore news in gold trading, we have said that gold is very sensitive to news. So you have to really be knowing what's happening around the globe, geopolitical wars, those kind of things, the risk sentiment things, what the Fed is saying about maybe probably cutting the rates, such kind of things. You really need to be at par. Right, you need to be a very good researcher, and don't at any point ignore news, because higher chances that you lose. Right, so the other thing is chasing breakouts without liquidity. Right, don't just chase breakout, look at the liquidity levels, because this metal really respects liquidities. It grabs a lot of liquidity, so you want to know where the liquidity levels are and use them basically in terms of aligning them with your setup. Right, so the other thing is trading without defined buyers. You just came and opened maybe the 5 minutes chart, and you saw the price really pushing on the downside, and then you start pushing, putting in some sales trades. All right, that is trading without defined buyers. For you to define the buyers, you have to do the top-down analysis, monthly, daily, weekly, daily, to give you the directional buyers. 4-hour time frame, to give you to mark the levels, 1 hour time frame for intraday structure, and then you can maybe probably take your entries on the 15 minutes time frame or the 5-minute time frame, right? So if you are going to fix these mistakes, because I know a majority of us lose because of these mistakes, so if you are going to fix these mistakes, then your results should improve immediately, right? You should see your results improve immediately, right? So, and the last thing that I'll mention, you need to have a trader's mindset for gold, all right? Because gold is unique, honestly. This is very unique. So one thing, you don't need many trades, all right? You don't need many trades. What you are looking at here is quality vis-a-vis quantity. So you want to make sure that you better take a few trades, but quality trades, all right? So also what you need to understand, a trader's mindset for gold is that one clean setup per day is enough. That is enough, right? Like I mentioned, I do 2 to 4 setups in a week, right? So that tells you there are some days that even I don't trade. I can have a day where I have a very nice setup in the London session, and then the other day I have a very nice, the same day I have a very nice setup in the Asian session. If all of them goes to the winning direction, they are all profitable. Honestly, I'm done for my week, right? I am done for that particular week. So another trader's mindset for gold is that patient is a strategy, not a weakness. And this is why I say not trading is also part of trading, because you better not trade because you're not seeing a setup than try to take a setup that is not an A+ setup and you lose money. Okay, so if you're not patient, then gold is going to teach you patience, right? So you have to be patient, right? Because patient is a strategy, and this is not weakness. If you're not trading, it doesn't mean that you are weak or something. Okay, so what I can say is that trade gold like a sniper, not like a machine gun. All right, you know, a machine gun basically throws, you understand, a lot of bullets and such kind of thing, but you need to be a sniper. Right, a sniper is someone you aim, right? You have to aim, you make sure that that one bullet is actually going to achieve the results that you're really looking at. All right, so that is very important. And I'm going, basically, as I wind up, I'm going to give you a very simple daily checklist for trading gold. So number one, you need to check the bias is aligned from higher time frames to the lower time frames. Then the session timing, it needs to be confirmed. We talked about the best times to trade gold, the best sessions to trade gold. Then we talked about you have to identify the liquidities, make sure that you have identified where the liquidities are, and then make sure that the risk is defined before entry, right? Before you enter a trade, make sure that you have been able to define the risk, right? That it meets all your risk credentials or all your risk criteria. Then make sure that you have checked the Forex Factory calendar in case we have any news that are coming. And if we have any news coming, maybe probably like almost in maybe 30 minutes, 1 hour time, the best thing is to chill and wait for the trade, for the news to come out and trade in the trade what the data says. Or probably, if it's necessary for you to trade, then take small positions, all right? Minimize your risk completely. Okay, so my final thoughts that I can tell you, for the many years that I've been trading gold, for the many years that I've been studying gold, basically to understand how gold moves, I've been able to know or to identify that gold rewards discipline, structure, and patience. All right, gold rewards discipline, structure, and patience. So if you master liquidity plus timing plus your risk, then gold becomes one of the most profitable instruments or asset that you can trade, right? That you can trade. Okay, so I believe those are very nice nuggets that will help you even as you transition to 2026. You can sit down, refine, come up with maybe a strategy, backtest it in terms of how to trade gold. You can maybe probably adopt mine, but make sure you backtest as well, because from confidence comes from the point of backtesting. Even if I give you my strategy that maybe I use, without you not really back testing it, you might not be really confident using that particular strategy, right? So that is very significant. I believe you got some value, and you can be able to share this video with someone as well, who might be interested, maybe, or someone you know who trades gold, and maybe probably they're struggling. So you can be able to share this video with them. You can also like, subscribe, comment. Let me know what maybe probably you think about trading gold, how your experience has been, the mistakes that you've been making, right? And sharing is they say sharing is caring, but mentioning your problems, basically it means that these problems are half solved, because I will do maybe probably a video in terms of maybe addressing some of those issues that we have you will have highlighted. Okay, so until then, have yourself a wonderful time. Continue enjoying your holidays. Merry Christmas and Happy New Year. And I wish you nothing but the best.